So thanks to everyone for joining. We'll be talking about raising capital through security token offering today. In many of my conversations with clients, this topic comes up. I think people that are discovering the tokenization space and technology maybe assume that you just need to tokenize and the investors will come. That is very far from the truth. And so today we're going to be talking about what are some best practices and how you can make sure that you raise capital successfully through a security token offering. And we have really a wonderful panel of experts that have joined us today. So a bit of housekeeping first. If you'd like to ask questions, please use the Q&A section below and not the chat section. The Q&A section helps me manage questions and answers, whereas the chat section is just a general section. So thank you in advance for that. We will start with opening remarks from DigiShares CEO Klaus Schöning. So Klaus, please go ahead.
Hello everyone. Thank you, Gabriel. Welcome to the webinar today. This is one of many events we have conducted over the last 7 years, and we have one more webinar in December also, which is DigiShares Connect. And then we will be present in Dubai or Abu Dhabi, actually, in the beginning of December at the Bitcoin MENA conference and Global Blockchain Summit or something like that. And then we are starting to plan the next year's events. We'll be present, hopefully, a lot of places around the world to meet with clients and partners. So Black Manta, unfortunately, could not make it today. They are, I think, a key player in the distribution channels for, especially for Europe. But if anyone is interested in speaking to them, we can connect you, and hopefully we will have them on one of our next events. As Gabriel is saying, just because you tokenize something doesn't make it easier to sell. So, So you need the distribution partners that we're presenting here today, and indeed the distribution side or building the buy side is one of the biggest challenges in the tokenization space at the moment. Hopefully there are other reasons to tokenize than to do an STO, such as to digitize and automate, democratize, and so on. But facilitating a raise is, of course, one of the key applications. So I will give back the words to Gabriel, and hopefully everyone will enjoy the event. Thank you. Bye-bye.
Thank you, Klaus. So yeah, I mean, we're going to start with just each participant presenting themselves and what they do, between 5 to 10 minutes each. And then we'll just go directly to a panel discussion and Q&A section. So please do participate in the Q&A section, and I will do my best to address each and every question and pose it to panelists. So yeah, I mean, we can get started now with VARUN Sharma, Director and CMO of Growth Turbine. VARUN, the floor is yours.
Thank you so much, Gabriel. Hello, everyone. My name is VARUN Sharma. I'm the director as well as co-founder of Growth Turbine. We are a Canada-based agency. We help issuers across the globe raise capital through both traditional methods as well as through alternative investments. We've been in business since February 2016, so in roughly about 6 months, it's going to be 10 years, since we have been raising capital for companies. So we're a pretty well-established firm. We do the Reg Ds, Regs 506Cs, Reg As, tokenization of RWA, ICOs, funds. We've got a really wide range of expertise in that. We've worked on close to about 230, 250 campaigns across, all the years, raised about close to about $500 million for different companies. So, we do have a good track record as well. I think I mean, from my experience, like, from what I've learned, and as Gabriel said, like, it's not about like, just get the technology, put it on the platform and raise money. I think that's something which very rarely happens. Um, from what I've seen in terms of, what works and doesn't work. I mean, if you look at an STO offering, at the end of the day, it's a security, right? It's a tradable security. It has this digital rails, it has a lot of additional benefits, but at the end of the day, it is a security, you know. Um, from what I've seen is a lot of people like, when they want to promote their offering, what they do is like their pitch is something like that, like, hey, invest into this. We are disrupting this market, and we have got these A, B, C benefits. And if you are an early stage investor, or you would make X percentage returns, which depends on like the industry and that they're working on. Um, I think there is a problem with this approach because we work with family offices, we work with the high net worth investors as well across the globe, and the first thing that they look for is not, how much money they can make on a deal. It's not about, 15, 20, 30% IRR that they can make. The first thing I think that what a lot of issuers should focus on is actually de-risking their investment. So even if you look at the roots of our economy, the first financial, the real, I mean, the backbone of every single economy is actually bonds, and the bonds, the reason why the bonds are so popular is because they are guaranteed by the government, right? But there is a de-risking in that, and that's because of that, the banks get the money and then they lend it out, and then all the everything else comes into place. So instead of like pitching like you can make X amount of return, the whole pitch at the beginning should be how the investment is safe. Investors don't, the first thing that investors look for is, am I going to lose money on this investment or not? If not, then they go into, the other things. So the pitch should be always about, it should always begin about like how you are not going to lose your money, with how do I de-risk it? And that can be done in different ways. The structure of your deal is one thing. Like, there are the way you structure your offering, you can de-risk it. You can also do it through credibility, in terms of like what you have done in the past, that builds up a lot of credibility, and that helps investors gain confidence. Once they understand that you have taken a de-risk position, then everything else, goes into consideration, like what the project is, what the offering is, what are the projected returns. Because at the end of the day, they are all projections, right? Um, the second thing I think which a lot of companies, don't focus on is traction. Traction is super important, whether it is, I mean, irrespective of, what we are or what industry you are in. But I mean, traction is super, super, super important. Like, I mean, and again, I understand like sometimes like a chicken and egg situation, I need to get it done before I can get that. But it doesn't mean, in terms of revenues or profit margins, it can be LOIs that you've signed, or it can be number of users on the wait list, but you've got to have investors are smart people, especially, serious investors. They have a lot of opportunities on the table. They very rarely fund ideas. You need to have like some legs, and you've got to demonstrate it. So you've got to focus on that, like, building up like traction and leading up with the first structure, I would say, is de-risking. The second is traction. And then the third part can be, the investment opportunity, the market size, disruption, the technology, the asset class, all those things should follow. Um, I think those are some of the, key factors that I've learned, like, that you should always prioritize in your pitch, whether it is on, a cold outreach email or just a pitch, or a presentation that you're making to a VC or a family office or anything. If you follow this structure, that what you've seen is generally, it leads to more, it leads to better results. So those are, some of the key factors that I've learned, which I think a lot of people should implement if, in order to acquire the right investors. Over to you, Gabriel.
Thank you, Varun. And your first rule reminds me of something Warren Buffett said. I think he said, two rules to investing. one, don't lose money, and two, don't forget rule number one. So that kind of like goes in the same direction as what you were saying. So no, thank you for that. Super interesting.
Thank you.
All right, so please stick around for the panel discussion afterwards. But for now, Richard Luftig from Castle Placement, who's a managing partner over there. Richard, the floor is yours.
Hi, everyone. Thanks for having me. Castle Placement is an SEC-registered, FINRA-licensed investment bank. We were formed in 2009, so we're almost 17 years old. We have 44 bankers and 10 analysts, and we raise private equity and debt capital. We've been quite successful. We've raised multiple billions of dollars for our clients. And our platform from day one was built on a data and technology foundation. And that mostly revolves around our investors. We have 110,000 investors on our platform. These are institutional investors, so family offices, pension funds, insurance companies, private equity, hedge funds, venture capital, sovereign wealth, strategic investors, et cetera. And we've gone through the painstaking process of determining for each investor their detailed investment criteria on a very granular level. So we know their investment size, stage, geography, industry, equity versus debt, et cetera. And that's super, super helpful. The bulk of our business has been primary issuance, but we have gotten our ATS license, and we plan to become a major player in the secondary trading space. And that all dovetails with security token offerings. We've been obsessed with cryptocurrency and blockchain technology since day one, and built much of our technology in anticipation of what's happening now. The ATS and our app, which is called CPGo app, is built for investors to find issuers, for issuers to find investors, both for primary and secondary transactions. And I will echo the comments that the first three speakers have made about liquidity. I've written countless posts about this. Not every, but so many people use synonymously tokenization and liquidity. And it's really a joke because those are not synonyms, okay? We are very skeptical about a decentralized trading platform unless the technology catches up and we can create agentic curation. Because if you don't have curation, and we've seen this happen countless times, you're going to start seeing really stupid deals on the platform. And worse, meaning fraudulent deals on the platform. And as soon as you start seeing clownish transactions or fraudulent transactions on a platform, investors are going to abandon and fast. They just have no time or patience to sort through a bunch of stupid deals. So we are a huge believer in curation, and we are extraordinarily careful about the type of clients we take on and the type of issuers and sellers that can go on to CPGo. And we think that that is the real key to unlock liquidity, because this is just a cold start problem or a network problem. You need to have issuers and you need to have investors. If you don't have one side of that equation, you do not have a platform, or do not have a functional, profitable platform. And the way to attack that cold start problem is to have great deals on your platform to attract investors, and to have great investors on your platform so that issuers and sellers want to put their deals on your platform. And, I can tell you without a doubt that the best way to crush an investor relationship is to send them a bunch of transactions that are not in their mandate. So, if someone's investing in agriculture tech in North America and you send them a data center project in Europe, they're going to lose your number real quick. So we are obsessed with finding the right deals and making sure that investors are seeing the right opportunities. If you look at the crypto space, there's an extraordinary amount of time and money and resources spent on building the rails. And the rails are super important. And Castle Placement has spent a ton of time and money and resources building the technology rails. But the rails are not the key. The key are fundamentals. And crypto is fascinating and fun, and meme stocks are fun, and meme coins are fun, and NFTs are fun, and that's all great. But in the long run, we're betting on fundamentals of transactions. That's why we're so excited about security token origination, because those offerings will hopefully be showing revenue, cash flow, ownership. And the beauty of the blockchain technology and smart contracts is we can now marry those fundamentals to the benefits and affinity that a company can offer. We call this corporate currency, and we are just super excited. We did a transaction recently for a new cutting-edge blockchain technology company where the people who buy the corporate currency are getting ownership in the company and affinity benefits to use the blockchain ecosystem. We think this is the future, and we're very, very excited about it. If, footnote, you come back to fundamentals and good transactions. The last thing that I would say is that we've seen this over and over and over again, and we would just encourage people to really spend their time on structuring solid, real transactions, because failures and frauds can set the industry back years. And we can kind of predict that that's going to happen. And we're just hoping that the entire ecosystem is vigilant to prevent that from happening. Thank you.
Thank you, Richard. And we just got a couple of questions that are specifically addressed to you in the Q&A section. So I'll just pose them right now. So the first question is regarding the chicken and egg problem. So do you need great products first or investors first? Or is it maybe both at the same time? What's your opinion on that?
It's a fantastic question. And my personal prejudice is you need great deals. Great deals attract investors. So if you had to choose one, I would definitely say great deals. But to be fair, in order to attract great deals and for clients to hire you, you need to be able to demonstrate that you have a network of targeted investors who are going to invest in their deals. So it's a close second.
Great answer. I agree. And the other question was regarding the regulatory oversight. So you're FINRA registered firm, and now with the ATS, SEC, has oversight over you. So does that impede or enhance your business?
Oh, it definitely enhances our business. There are so many jokers who run around raising capital without being licensed. They're literally committing crimes every day. And any issuer that works with such a person or an organization is similarly at risk of criminal and civil penalties. I would also say that a lot of people bitch and moan about regulatory compliance, but the truth of the matter is it's so good for your firm. It provides such discipline and guardrails and process and systems that make your capital raising platform stronger. So it's a huge benefit, in my opinion.
Perfect. Thank you, Richard. All right, we're going to go on to the next speaker, Mike SEILER, CEO and co-founder of BRICKMARK. Mike, the floor is yours.
I'm really excited to be part of this panel together with such an impressive group of experts. I think we have heard quite a lot of aspects which I would share with Richard and VARUN, especially great deal and structuring. I come to that point later on, but thanks to Klaus and the team for inviting me. Hello, everyone. I'm Mike SEILER. I'm the CEO of BRICKMARK X in Zurich, Switzerland. BRICKMARK X is a global leader in real-world asset tokenization since 2018. Simply, we transfer institutional-grade real estate into compliant, investable, and tradable digital financial products by bridging traditional capital markets with digital asset ecosystems. Now, I think when it comes to structuring, that's a very, very important aspect what we do, because we claim ourselves as real estate experts, and that is the product aspect. And now I'm going to give you just an example what we understand about the great deal. For example, we enabled 2 years ago the developer of Ritz-Carlton Hotel project in Zermatt, which is was a project of about 300 million, to raise 80 million equity through dual issuance, mainly traditional security issuance through ISINs, and in parallel digital security asset placement. And that is a good example from my point of view to offer investors a very, very good deal, especially as it's attractive from its branding. But also at that part, we are able to raise that amount of capital because the client brought along traditional investors which were not really familiar with the digital aspect, and we brought in through our platform the digital natives, I would say. So we were able to enable not only the traditionalists, but also to add on some digital natives, which make the deal very, very interesting from both sides. So there is somehow a bridging to that. So that's just one example of it. This structure is very efficient. We had a broader investor access through this good product. And also we could fractionalize it according to the demand of the investors. So, you know, as well, several investors prefer lower tickets, higher tickets, a completely different structure in the ticket. So we were able to manage, enable their needs on volume size and so on. We don't only do that on security, we don't do that also on the debt and mezzanine side. We do that on a global scale together with regulated partners worldwide, because as Richard said, regulation and infrastructure, which is really institutional grade, is an absolutely key aspect when it comes to trust in our space. At the moment, we have a pipeline of more than 3 billion projects, landmark real estate project in commercial real estate, luxury and hospitality, where we, as we said, are in the process of selecting and designing the structure to the fit of our clients, which we have on our platform as well. At the moment, I would say we do more or less 100% private placement activities in our network through our partners. We are in the process of working together with regulated exchanges here in Switzerland. You may heard about BX Digital, which has received the license for first regulated exchange here in Q3 2025 and plan to issue the first projects in Q1 2026. And we are in discussion on how we can structure a product, making it fit enough through and issuing on such a platform to also enable not only the, I would say, primary market, but also potential secondary market liquidity. But we all know it's going to be challenging, but somebody has to be the first mover. That's it from my side.
Thank you, Mike. Appreciate it. All right, we'll go to the next speaker, Adam Buktila, CSO and co-founder of RWA.io. Adam, the floor is yours.
Hello, everybody. Yeah, I just want to echo what's been said. I think it's been a great session so far. I resonate a lot with what was being talked about, especially around deal structuring, making sure you have something that can actually stand out. I'll start with a little intro. So, as you mentioned, I'm co-founder, CSO of RWA.io. So essentially, we've built kind of a data and distribution layer. So we track over $300 billion worth of assets. We've got 400 projects on the platform, many hundreds of different tokenized assets. What we're actually trying to solve for here is the fragmentation problem. There's new deals, new issuers coming online all of the time. And we need to be able to essentially, both from the investor side, give them a way to find these projects, but also from the issuers, give them a place to be able to showcase what they're doing. I'm also a part of dfactor. So dfactor has the infrastructure layer that essentially lets anybody bring these real world assets on chain. So over the past couple of years, we've brought millions of dollars on chain, things like bonds, real estate assets, gold, trade finance. So we've seen what works and we have the battle scars for the things that haven't worked, right? So it's not a magic bullet. I think everybody has said it already, but I think all of us are kind of jaded with speaking to different clients who just assume that if you bring something on chain, you're magically going to get access to all of this crazy new crypto liquidity and all of the degens are going to just ape into your project. It doesn't work that way. There's different segments of the crypto market, and RWAs or tokenization or tokenized securities, whatever you want to call them, it's a subset of that market. So you really have to know your customer. You have to know who you're trying to sell to. Is it the institutions, the high net worth individuals, the institutional capital? If it is, then structure your deal as such. Make sure it's attractive to them in ways that are understandable, meaningful. But I kind of want to set the scene a little bit, and I think it's kind of been touched on. Like if we had a spoke maybe 10 years ago, I would have said that the technology wasn't ready. It still needs to catch up. It's not a tech problem. If we had a spoke 5 years ago, I maybe said the regulation needs to catch up. It's not a regulation problem. The biggest challenge now is the user experience, the access. How do you make these products attractive to hold and also easy to use? So trying to kind of give a little bit of a reality check, but not be all doom and gloom, right? There's a lot of really interesting and great ways and reasons why you would bring these assets on chain. But the key thing here is you have to stand out. So just because you're bringing a $10 million bond on chain doesn't necessarily mean it's exciting. Look at the yields that are already available on DeFi, for example, for people with non-KYC or other ways that they can get access to some of these yields. So again, know your audience. If it's the crypto audience you're trying to tap into, make sure that your project has some additional utility, right? Lots of different tokenized assets now are looking at ways that they can, for example, use like collateralized lending, right? Where you're using your token as collateral, you're taking a loan against stablecoins. It's not a taxable event. You're solving the problem of a lot of these security tokens have long lockups where you have to basically lock up your capital for a year plus, which in crypto, it ages like dog years. So if you ask somebody to lock up their capital for a year, it's going to feel like 7+, right? So just again, make sure that if you're asking somebody to do that, you have other utilities, other ways that they can actually interact or use that token. And that's kind of how to stand out. So as I mentioned at RWA.io, we track hundreds of projects, and oftentimes a lot of the projects look the same. The yields look the same. It doesn't matter if the underlying is a real estate project or solar or agricultural. It's all around that kind of 8%, 12%. If you're getting something that's a little bit higher, it's great. But again, think about what people can do with the token or compelling reasons why they would hold that. So the three kind of pillars I'd like to leave everybody with, the three pillars of success maybe for fundraising, it's distribution, build up these not only your community, but these different liquidity paths. Don't work with projects that will say, oh, you've got to use our tech plus our in-house solution and only our contained environment. Just be aware of that, right? You have to be aware that tokens don't sell themselves. You have to put yourself out there. I think Richard said it well too. It's, trust and track record is really, really important. And there is a saying in the Bitcoin world, which is, don't trust, verify. But in this real world asset space, it's in the name, right? People want to see real people, real institutions behind this. So make sure that you've got your distribution, your compliance, which is no longer the blocker it once was. Work with the right partners, but be mindful not to overspend on legal. And I know this because I have the scars to prove it. We've spoken to every different regulator around Europe, and I've spent however much on lawyers telling me ultimately, oh, it depends. It depends on what way you structure your token. It depends on who you're selling it to. Try to look into some programmable compliance. And a lot of this compliance can now start to be actually embedded into the token level. So think about not just vanilla kind of ERC20s, but there's also ERC 3643, and there's some specialist asset standards that actually embed things like whitelisting or geofencing or all of these things at the token. So yeah, I think it's distribution, it's compliance, and the final thing is the product. Make it something worth holding. Think beyond ownership, design it for use and for access. So, look, the market's real. The institutional capital is here. We see it. The numbers are there, but we're still very, very early in the space. Tokenization isn't the magic bullet, but when it's done with purpose, with transparency, utility, it can become very exciting. So, thanks very much, everybody, and I look forward to the discussion.
Thank you, Adam. And the programmability definitely resonates with us at DigiShares. I mean, we work with leading security token standards, ERC 1404 right now, and we're launching 7943 with some other industry players. And yeah, you mentioned the KYC whitelisting. That's definitely a must. There's also, you can program the lockup period, which becomes very important when we start talking about a secondary market. And I think we'll talk about that in the panel, specifically with Richard, who has the ATS license now. So you have the lockup period, investor minimums and maximums. There's a whole bunch of things that you can program directly into the token to automate the compliance. Super important. There was one specific question to you, Adam, in the Q&A section, so I'm just going to pose it right now. How do you distinguish between the RWAs that are traded in DeFi and the STOs, which are also considered RWAs, or do you make that distinction? How do you see those two? Oh, you're on mute. Yeah.
I'm on mute. Sorry. Yeah, it's a good question. I think there is a distinction. RWAs can include anything some people consider, for example, stablecoins as RWAs. Depends if you consider fiat currencies as real, but that's maybe a different debate or philosophical thing we can go into. But how do I say it this way? So STOs are a part of RWAs, but not all RWAs are STOs. So you can have gold-backed stable coins or different yield-bearing stable coins, etc., etc. But again, please, I invite everybody to check out the platform. We've got hundreds of different STOs and others on there. So if you think there's anything missing or you'd love to see something else, let us know.
Great answer. Thanks, Adam. So we're going to go on to the final speaker before the panel section. Mark Mariampillai, founder of Tokudi and business developer at Valerium. Mark, the floor is yours.
Thanks, Gabriel. I've got a deck, so I think one of our colleagues is just going to share it as well.
Yep.
Cool. I think everyone else has covered off the main points on buy side, but I'll jump into it. So yeah, my background is in capital markets, and I'm BD for Valerium Markets. We are a UK listed co. and have a regulated RWA exchange out in El Salvador. And interestingly, we're migrating to DigiShares infrastructure. You'll be happy to hear, Gabriel. So like Richard and the others mentioned, yeah, we have a regulated entity. We have a very good relationship with the El Salvador government. Obviously, they're doing great things in the tokenization space and also in crypto in general. Krista, if you could just move to the next slide. Yeah, so look, like a lot of the others on here, you know, Valerian Markets has a marketplace with various issuances. On here is just an example of real estate that everyone does, but later on the deck, I'll show you some interesting issuances that we do. Now, like everyone else, I personally see the biggest issue on tokenization is buy side. We have plenty of issuers coming on board, great issuances, you know, 400 mil, 1 billion deals, but at the end of the day, it's really the buy side. And what we find is whether it's institutions, highly sophisticated retail, the problem we have is basically a lot of these issuances still get filled the traditional route behind closed doors. Now, I think we are moving to a place where, as you see in Dubai with the DLD proof of concept, you do get real estate deals sold out in seconds, actually by qualified retail. And we are seeing tokenized deal get fully sold out. From a Valerian Markets perspective, Krista, if you just move to the next slide. Yeah, so we've got a couple of pillars here. So we've got the financial products and enterprise, but we've also got interesting items like sports and lifestyle. And what I've been focusing on is interesting RWAs where you can tokenize a sports player, for instance, a cricket player that's up and coming, wrap that into an RWA for say 5 to 6 years. Now, if they go on to be the next Chris Gell or one of these big cricket players, or can be translated to tennis or football, then investors could get a passive income from this and essentially their royalty. So it's a different way of looking. I think in traditional markets, you know, football has something similar. Obviously, it's not tokenized. Okay, yeah, we just moved on to the next slide. Just back one more. Sorry, just quickly. Yeah. So yeah, we've got sports and lifestyle. So that includes music royalties, mining and chemicals, real estate, like everyone else, and green finance. What we also do is we do brokerage and custody. We've got secondary trading, but via a peer-to-peer thing. So sorry, Kirsten, if you could just move on. I'm just going to cover a couple of interesting issuances that we've got. I think it's the Wagin one. So I think Adam, just a couple of slides down, I think it's 5. Yeah, next one. Okay, cool. So I think Adam covered this off earlier on. You know, we really need issuances that people are interested in. And this one's subject to regulatory clearance, but it's interesting. It's an Uber startup. The issuer is giving a 12% yield. But the interesting thing here is that the actual tokens could be converted to pre-IPO equity at the end of the maturity of this token. So I think back to the point there, for tokenization, we need to give token holders something a little bit different than, hey, come in and invest in here and get a 12% yield. 12% is great. I think in the crypto markets, you know, on Nexo, for instance, you probably get 10%. Tops on there. In DeFi, yeah, you probably get something similar than 12%. But to say that this would be backed by a real company with real assets, it is slightly different. And then also, you know, the whole pre-IPO equity. Now, what we've also been doing is we've been syncing up with a number of blockchains. 2 are under NDA, so I can't mention them, but one of them is called SigChain. They're up and coming. Now, what that allows us to do is plug into a different type of distribution channel outside of the regular ones that we see for RWA. So SigChain are building essentially 150 mil vault, where a fund manager will come in, sit in between, and be able to come in and plug into RWA marketplaces, which one of us will be there. So I think RWA marketplaces and us in tokenization, we need to be in a place where we can be innovative, adaptive to the market, and find new ways of distribution, not just the traditional ways. And bringing assets such as Wagin onto a new chain such as Zig Chain, where they have this ready-made buy side built in, just gives us another competitive edge. Outside of that, personally, I see the market after this bull run really getting creamed out of the projects that really don't have legs to really push on. I think projects and businesses that have a fundamental backing, such as regulated exchanges like ourselves and the others on this call today, really have a place in the market where real institutions, real individuals that are qualified will come in and start looking for assets that have a real meaning. And one example's on here. And Gabriel, I think that's it from me. A lot of the others covered a lot of the topics, so I didn't want to double up.
No, that was great, Mark. Thank you. So yeah, we have a wonderful diversity of speakers today with, as you have seen, with the regulated side, so US, Switzerland, and El Salvador. We have the marketing expert from Canada that builds data-driven investor acquisition strategies, and we have RWA.io, which is I would characterize it as an information aggregator, kind of like similar to a Bloomberg, but for RWAs, if that's a fair characterization. So really excited for this panel discussion. We're gonna get going right now. So we spoke about we touched upon some of the benefits of tokenizing, and while it doesn't magically make investors appear, there are some core benefits, like the programmability, and in my opinion, what that really enables is just seamless buying and selling of shares and of securities, and enabling that secondary market. So to me, the main benefit is we're telling investors, all right, if you invest with me, you will have, instead of being locked in for 5, 7, 10 years, you will have access to a secondary market where you'll be free to trade within the confines of the regulations, of course, and that's enforced via the programmability. But you will at least have access, and so I want to maybe dig a bit deeper on that, and want to hear all of your opinions on some of the other benefits that you see. So maybe Richard, on the ATS side first, is that what you see as maybe the biggest benefit of tokenizing a securities offering, or is maybe something even more important than that aspect?
That is a huge benefit. I think that it's ambitious to program the regulatory compliance obligations. I think many people have tried. I'm not sure that it's worked yet. It will. All of this will work, but the time frame is the question. When you trade a private equity secondary, you have not only the federal security in the United States, you have not only the federal securities, but you have blue sky laws, and different states have different requirements regarding secondary trading. So you have to be super, super careful. And like I said, it's quite ambitious to do that programmatically. So we're still doing it. By the book, and we're watching carefully as the technology evolves. But it's not there, and I don't think it's really close yet.
Got it. So I mean, there definitely are some aspects I think that are programmable today, but I guess what you're saying is not everything can be programmed as of today in the token. And so for sure, the benefits will be greater as time goes by. I think we can all agree on that. Does anyone else want to jump in here on either the secondary trading benefit or any other benefit that they think is really key here?
Yeah, I'll just chime in really quickly here. So a few years ago, when we reach out to investors, like we had to kind of educate them on tech tokenization, like what it is, and they kind of probably haven't heard. I mean, most of them haven't heard about it yet. I would say about 3 years ago, 2.5 years ago, they heard the word, like sorry. Especially, with BlackRock, Citibank, HSBC, like, putting in tons of money into it. So they were like, oh yeah, we've heard about it. Yeah, tell me more. Uh, we've got to a phase now where, I mean, I was on a call with the family office last week. They're based in Middle East, in Dubai, and they were specifically asking for projects that have tokenization. So the point that I'm trying to make here is that transition is already happening, from I don't know versus I've heard the word versus I want this. I think 2026 is going to be a huge year for tokenization.
Yeah, for sure. I think a lot of us here agree.
Gabriel, sorry.
Yeah, Mark.
I was just going to jump in. Yeah, I think on
Yep.
the secondary trading side of things, I think when we get to highly liquid tokens, I think secondary trading will come into fore. And I think I keep going back to Adam's point. Sorry, it's really we need those type of issuance to come to fore, right? So we're not talking about bond issuances, some boring kind of 3% APR. We're talking about real new companies issuing a token with real utility that will spur on, highly liquid tokens. It may be real estate, could be the ones, what we're seeing in Dubai on the tokenization of deeds. At some point, yes, maybe they could be highly liquid tokens if, ends up being a skyscraper. But I think there will be a product. I think there could be a company, a big brand that gets tokenized. And I think that could actually spur on, high frequency trading that we see in investment banking or equities that we see. But I think it's coming. I think we're still kind of a few years away. We know the tech is there. It's, like the other spoke, we're just waiting for that particular issuance to really kick it off.
Mark, that is a spectacular point. You see it in Reg CF and Reg A equity crowdfunding.
Mm-hmm.
I would say two things. One, large companies and large brands have not really adopted equity crowdfunding yet. They will, and that is going to have a huge impact on liquidity. So I think that was a great point. The other thing that I would mention is, everyone always talks about liquidity from the investor's perspective, how investors want liquidity, which is absolutely true. But I think the more nuanced question is, do issuers want liquidity?
Yeah.
And I think the pervasive answer at the moment is some do, but most don't. One of the tangential results of equity crowdfunding is that the issuer needs to provide public financial information about their performance. And guess what? It's not always great. And private companies are very nervous about that. And it's hard to see a world where there's 24/7 liquidity, where there is not updated financial information. So just something to think about.
Yeah, private companies and private funds as well, where they kind of set their own valuation pretty much, and they like to have their own NAV estimates, and whereas if they were confronted to the reality of the market where the price could go up but also down, that I think some funds wouldn't be fans of that, and I've definitely heard that point being made in my discussions with some of the larger institutional funds and those players. I'm wondering if anybody else has had like a similar experience and on the transparency issue with their clients.
So what we see when we talk to the regulated exchange, when they come up with an ideas of the issuer, it's exactly the point what Richard said. First of all, the issuer has the capability and the maturity in order to become really an issuer. That brings along all of that. That's the first thing. And the second thing is one of the lead investors in its own company. So so that makes him a very, very interesting, a very, very important stake in this game, you know. And when we do the due diligence with our project, we also look at that, and not really many of them are able to go that path. Even we are on a stock exchange which have limited, you know, volumes, and for sure not that liquidity as we are going to have in stocks. So that is really a key question. But on the other side, we had some discussions with, I would say, rather well-known banks who will be able and willing to do the market making of it. So there is somehow, you know, let's give it a try and see how it's going to work. And we need the exact good issuer for doing that, and maybe it works. I think that is something which we have to find out in future. So it's very, very difficult to answer the question right now.
Yeah, absolutely. And there was part of the point Mark made was about the utility that can be added on top of just the security itself. And there was actually a question by another Mark in the Q&A section about this. What are some of the creative add-ons that you've seen on top of these security tokens that provide benefits maybe to investors that would be much harder to do without the blockchain aspect? Curious to hear your experience on that.
Well, maybe we have experience on that because our clients really love, especially in where we have luxury product projects or hospitality. The issuer or the clients really want to have something special that to differentiate from other tokens which are, let's say, relatively straightforward security with dividends or something like that. So they really want to have something like, you know, a special, let's say, a special 2 weeks in a hospitality in a hotel for free every year as part of a dividend, especially when it comes to the top brand at Ritz-Carlton, which I explained previously, is a chalet which they can use for 2 weeks, something like that, or a privileged bonus program when they go into the let's say the hotel chain again. So that's some kind of, you know, gadgets add on, which makes the whole story much more, let's say, interesting for them. But it's not really something about for I would say 0815 investor. I mean, that makes not really the difference because it ends up with profit, and that is just something which we've seen so far, and which make also the whole story maybe a bit more attractive.
Yeah, there's going to be some really interesting applications in hospitality. I saw this video of someone unlocking a door with an NFT, basically, that was in their wallet. And so I think there'll be some interesting models where you can sell security tokens as an investment opportunity, and then also deliver like an NFT that gives you access for a certain amount of time to a property. That's going to be really cool, I think.
Or maybe just a last comment on that. You know, we had even I mean, when it comes to a whole area, there comes energy into play. There come commercial usage into play. There come licenses into play, and so on. There is a huge bunch of ideas around that. But that's, for me, it's just you and a specific ecosystem which can work, not really on let's say on a really global scale or a larger scale. Sorry to interrupt.
No worries. Adam, please go ahead.
No, not at all. I was just getting excited when you were talking about the membership and the room key card, because this is the way we need to be thinking, right? It's not only you're getting access to the security, but what's the additional? Are you getting access? Is it part of a membership tier type structure? I mean, we've spoken to a pretty prolific chain of cafes that wanted to kind of do this in a tiered structure. You know, you invest X, you get a free cup of coffee. If you invest a lot, you actually get voting right shares, right? It can be done in many different ways. I think collateralization, and I've mentioned it already, is one of the key kind of points because a lot of these assets are traditionally illiquid. So if you can get the ability for people to basically borrow stable coins against those STOs. There's obviously some nuances, there's some regulatory challenges depending on where you are, etc. But I think it allows assets that are going to be locked up, etc., to be yeah, to be utilized. And actually, Mark and I had an interesting conversation about this in Singapore because there's a lot of the times there's not the secondary market to actually support a lot of this DeFi kind of lending and borrowing because what happens in the event of a liquidation, right? If I don't pay back, you can't necessarily sell it if there's no liquid market. So there's also options to have things like, you know, buyer of last resort auctions almost, which is if this person defaults, I will buy those assets at a discount, etc. There's lots of different dynamic ways you can play with it, but start simple is what I kind of tell everybody. So make sure your product is interesting first of all, and then you can start to layer on these utilities, which can go as wild and wonderful as you want to, really.
Yeah, collateralized DeFi loans are going to be huge, I think, because you know the perfection of the loan is optimal with blockchain. It's like it's code basically that just self-executes. So that's going to be great. But on the brand loyalty point, I think maybe this is or possibly one of the most relevant for a brand or a company that's raising capital that wants to, you know, create a brand awareness and loyalty. I think today, like when we think about that, our mind goes to maybe credit cards for specific brands or like point systems. But how cool would it be if most brands could enable you to become a co-investor, and then provide utility on top of that, and then every fan of the brand could become, you know, not only just a user but also an ambassador because they would have an equity stake or a profit share like with that brand. I think probably the relationship between consumers and brands could change quite a bit thanks to security tokens. I don't know if you guys agree or have any thoughts on that. Mark, I see you raising your hand digitally.
Yeah, no, sorry. I was actually going back to Adam's point on collateralization, yeah, because we speak about it a lot in Singapore, and it is, you know, once we have those strong issuances, I think there will be a market to collateralize it. So we see it today. I mean, it's an investment banking product, repo, right? Hedge funds used to bring in shares, and banks used to collateralize that and give them cash until they give the shares back. You know, Nexo, a few others that went under, you know, do this in crypto. So you lend your Bitcoin, you get 50% LTV. For some other assets and altcoins, you probably get about 30% LTV. So I reckon for Adam, well, you know, jump in here, but I reckon for an RWA issuance, you know, we could probably start off with something like a 5 to 10% LTV. Yeah, it's not a lot, but hey, it will get the ball going. And then, you know, if you have a bond, for instance, that probably, you know, the LTV that could go up quite a bit. And I think what that will bring in is a different market. Maybe we're not really talking about just crypto degens, but it could be sophisticated investors. It could be something similar to hedge funds, you know, that they buy a bond and they want to leverage that and, you know, go and buy something else. And it doesn't have to be a digital asset. So I think collateralization will play a very, very big part. You know, it might not be in the next year, but the tech is there. It's just for it to be utilized as well.
I think you make a great point about the LTVs and how it could be a structure. It really depends as well on the underlying, because certain underlying assets, it's easier to price them with oracles, etc. If you're talking about gold or other commodities that are liquid, have a global spot price. But for other different asset types, sometimes getting that pricing of the asset can be a challenge as well in a real-time environment. But you're right, it's coming. And I think most people you speak to about this kind of see it as a natural progression. But again, we need the liquidity, we need the interesting products, and we need hedge funds and people to understand that there are these opportunities to make some cash.
You know, what's interesting, Adam, is when I speak to my old investment banking colleagues at Credit Suisse and UBS, I used to show them platforms like Nexo, you know, and they were like, you know, this must be a scam. You know, how does this work? So I think on the digital assets and crypto side, I think we're getting over the bump now. And I think as RWAs come on, I think, you know, the institutional side, you know, some of us are from the capital markets background. It's going to be a lot easier for us to sit down and say, hey, the repo you do today with a hedge fund on some, you know, FTSE share or an AIM share or, you know, New York Stock Exchange share. Look, we're going to replicate that for a digital asset for an up and coming company, so Uber startup in Panama, for instance. And they'll be like, okay, great. I've invested, you know, 500 grand in there. Can't do anything but get the yield. And they'll be like, okay, great. We can now collateralize that and get some of the value and go for another startup that's coming. So, so yeah, I already do see that conversations starting to happen because they will now really understand it. Whereas before it was, you know, we really don't get crypto. But an RWA asset, I think, will be a different kettle of fish. So I think we're going to see them coming in. To be honest, I get loads coming in on my LinkedIn every day. So I think it's a matter of days, months, and years.
But isn't one of the key points here that a platform like Nexo was centralized, basically, whereas here with the collateralized DeFi loans, it's just code that auto self-executes, and you know, each party can set their own term and transact in a bilateral manner. That's the way I think of it. At least, how fast do you think we're going to get to the decentralized model, or does the regulation enable it today? I guess, has anybody thought about the intersection between regulation and then these collateralized DeFi loans?
Well, the one thing you have to think about is query, why do crypto loans proliferate and real world assets on blockchain not proliferate? So, you know, there's so much liquidity in crypto. Like, you know, 2 weekends ago, it was severely tested, but it worked. I mean, it's still liquid, and you know, these are meme coins, and there's nothing to study or analyze. It's just the perception of the marketplace of the value of the coin. Well, once you start having real world assets and people have to think about the value of the underlying collateral, and you layer on the regulatory compliance requirements of those real world assets, it gets much more complicated.
Yeah, so that was a part of your point earlier. I don't know if the word curation is the one you used, but basically this idea of you're still going to need investment or finance professionals to kind of act as a sort of gatekeeper in a way, and when relevant, of course, ensure that the regulations are respected. But so maybe like we'll see a lot of hybrid systems emerge where you do have the smart contracts and the loan perfection and the collateralization aspect, but you also have the human gatekeepers that populate those platforms. That's maybe how I would see things evolve.
Yeah, and I loved Mark's point about the affinity benefits. This is something that we've been doing for a while at Castle Placement. We call it corporate currency as opposed to cryptocurrency, and it's just incredibly powerful. Like if you think back to Uber, okay? The early adopters in Uber, both the drivers and the passengers, spent their money. Well, the drivers spent their time and the passengers spent their money to use this new service. Can you imagine if at that time they were also buying ownership in the company? They were supporting this company. They were literally making this company happen and make it successful by utilizing it, but got no benefit of ownership, which would have been worth, you know, 1,000x. That's what's going to happen in the future. You're starting a new platform. You're going to be selling corporate currency. So they're going to be able to use your Uber or your Airbnb or whatever your company provides. They're going to be able to use that token to be active in your ecosystem, but they're also going to have ownership in that company. And that is going to be massive.
Yeah, fully agree.
I like
Mark?
that. Oh, sorry, I like that, Richard, because we can take a traditional example of that. Revolut, is a neobank. I think it was crowdfunded by, I can't remember which one, Crowdcube or something like that, many years ago. And the investors, I don't know if they did 1,000, but it was something like 100 to times 500x. So exactly that, right? It's making a model that's way more efficient, having these issuances like Revolut being in tokenization and giving them, something extra as a token. Yeah, so I mean, I'm really passionate, excited about what's about to come. I think the opportunities are going to be kind of mind-boggling.
Yeah, and so not only participation in the company's financial or wealth creation, but also the ability to receive micro payments directly to your wallet. Like if a real estate company wants to provide daily yield on their portfolio of 100 properties and add that as a benefit to investors. Well, with crypto stable coins, it's now possible. The added benefit of the secondary trading and in the future collateralized loans. So yeah, it's just quite exciting what we're going to see. Any more points on the benefits, or should we move to the next questions? Okay, so there was an interesting question in the Q&A section by someone who was asking about. So they were speaking with someone who is new to the space, and when they were explaining, that the person was saying, "Oh, but doesn't the stock market already exist? What is tokenization really changing here?" Would anybody want to address that question and the key differences between, going public and remaining private through a tokenized offering?
Well, the first one is the smart contract. The smart contract unlocks so much opportunity that we've touched on already. That to me is the number one answer.
Plus, yeah, tradable 24 hours a day as well. There's not all of these businesses are publicly traded, so you can get access to SME financing and things like that as well. But if you think about take it away from equities and into commodities or into something like a tokenized gold, well, the clear benefits are the fact that it's fractional. You can move it across borders without having to have a heavy piece of metal in your bag that's going to get confiscated. Half of my family are from North Africa, and a lot of them still save in gold because they can't trust their local currency. The currency's devalued like 60% over the past 10 to 12 years, so they hedge into gold. And fractionalized gold, tokenized gold, commodities, etc. It's all, well, it can be really, really beneficial to people that really need it. So I know it's a lot of the time, most of the issuances are kind of coming from, big financial products coming on chain. But we also have to think there's hundreds of millions of people that can really benefit. It can improve their lives if they can get access to some of these assets.
Maybe one aspect, which from my side, I think settlement T0, especially on the position side, is a very important factor when it comes to the trading infrastructure. And the second thing is cost. I mean, the trading infrastructure is much cheaper than it is at the actual infrastructure. We can see that we are involved in a project which they want to replicate the physical stocks on a trading infrastructure based on blockchain. And it looks as if they are much, much cheaper per trade. And that's going to revolutionize also the pricing on the trade side. So apart from 724, settlement at the position at the moment, T0, when you have the stablecoin implemented, depends probably on the regulation and so on. It's zero also on the cash side or on the other leg, and definitely the cost of the infrastructure is much cheaper. So you can see that also from the announcement from Nasdaq early September. They announced that they're going to switch to, they like to switch to digital assets by end of 2026. And this is mainly from my view or my information because of the cost.
Yeah, and what's a lot cheaper too is the legal bills in terms of going public, costs a fortune, millions of dollars. You have ongoing compliance costs, so with quarterly reports and everything. Whereas you can tokenize, remain private, list on an ATS like Castle Placements ATS, and enable that trading without the costs of going public.
And from a public marketplace, it's transparency. This is also an aspect which is maybe important, especially from the investor side. It's about that.
No, absolutely. So yeah, maybe a question on the current pushback, that you're hearing, like when you guys are pitching or helping your clients raise capital, pitching to investors or targeting investors with ads and then collecting their feedback. What has been some of the pushback that you've heard, and how can that be addressed? Specifically regarding the tokenization infrastructure, not necessarily like project specifics, but about the tokenized aspect.
Just from our experience,
yeah,
they usually don't mind the technology, or they often don't mind the technology, especially as we are offering it mostly on a dual path.
So that is one aspect. You have off-chain and on-chain?
Exactly. We usually tokenize everything, so we bring it on-chain, and then we really have two tranches traditionally for on digital assets, and there is no question. Also from the issuer side, I mean, technology is never a question. I would see that is for us the most surprising aspect when you start to talk with the originator or the issuer. We always say, yeah, technology and blockchain and so on, but I mean, they already think, yeah, you can deal with it. I mean, it's accepted. So from that side, also that is not a discussion we have at the moment when you talk to. The more important for the issuer and especially also is really the product, liquidity, the product. Is it fit to what do we really offer something for the issuer which has its benefits? Can we really raise capital? And can we raise it at a lower cost than on the traditional way? That is the question they are going to have. And on the other side, how is the product looks like? Can you really place it? And these are the questions. I mean, that is all already addressed by my colleagues, especially at the beginning of this session. I think this is something what I see at the moment.
Just to add on that, Gabriel, I think lack of understanding is one thing that we have seen. People don't actually understand it. And I think inflated net asset values has been a second issue as well. Like, people think their assets are a lot more valued than they actually are. So that kind of creates a discrepancy. There are questions about, like, what happens if the company goes bankrupt, and stuff like that, or how do I handle the legal and the tax side of these things, because a lot of companies use like BVI companies or some foreign entities. So the taxation issues, we get some pushbacks on that. So I think again, all of these can be addressed, and that's why you're like, how you present, who you present to, all those things become important.
Got it. So there's not too much pushback by people that are saying or that don't know how to use a crypto wallet or don't know what stable coins are. It's that part is getting more and more adopted. Is that what I'm
What I see is it depends on the regulation where you are talking to the people. I mean, just when you're talking to the people in Switzerland, it's fully regulated, everything is clear. I mean, it's all set there. When you talk to people somewhere else, then certain questions start to raise. How can we deal with that? And how looks it like that? And so in Germany, for instance, it's very difficult to discuss about security token issuing because of they're slightly different regulation than, for instance, Switzerland or other regulators on the MiFID II. And this is mainly the aspect. If the maturity of the regulation, the acceptance in the market is high and clear, and there are use cases into place, that the discussions are not so big. That's more or less the question about regulation and so on, and taxation and all that things which you are having anyway in such a discussion. And that is really part of it's really a maturity question on the market.
Understood. There was a question on the different asset classes and if you're seeing some perform better in terms of capital raising success in tokenized form. Is there an asset class that maybe stands out or it's just pretty evenly distributed across asset classes?
I think real estate is doing really well for us. I mean, Richard, I know you wanted to answer. Sorry about that. I think real estate, including like, multifamilies, hotels, resorts, commercial real estate. I mean, all of those classes are doing really well because of, I guess, the traditional approach to it. Real estate is still regarded as one of the safest asset classes out there. So that's probably transitioning into, the tokenization world as well. I think private credits are doing pretty well as well. I think that's where, because of the liquidity, and the contract, the benefits of the blockchain, I think that's something which we would see, go up in the near future. We've also seen we've seen a wide range. I mean, companies tokenizing like airplanes and ships and vessels and stuff like that. And surprisingly, they have been popular. So, if I would, I think those would be my my topics.
Interesting. Yeah, Richard?
I agree. At the end of the day, we think that it all tracks to what makes any investment attractive. There is a difference between retail and institutional investors. So like when we do a Reg CF or a Reg A, it's a very different animal than when we do a Reg D 506C. But at the end of the day, it always goes back to the quality of the offering. So I think real estate does well in tokenization because people understand it, they can relate to it, they live in it, they shop in it, they go to work in it, they stay at hotels. So that's something that they understand. I think it's harder to raise capital retail for a plastic injection moldings company because people can't really relate to that. But tokenization is not just about retail. Tokenization is definitely about institutional investors. And that's just going to track the quality of the deals. I don't think it matters the sector.
Good to hear. Anybody else on this topic of different asset classes?
Just from a data point of view, we're tracking it. So as I mentioned, we've got 400 plus projects, and it was a huge push for kind of yield-bearing stable coins, government debt, etc. was being brought on. Now you're seeing a lot more kind of corporate bonds, private credit, equities is growing quite a lot. I think you've seen what the backed team did with the X stocks and getting them available on different exchanges. I think that was great. Again, people generally, if you're talking about retail, it's a great point, Richard. People generally trade what they know. So if they can buy Tesla, Apple, Nvidia on chain, maybe they will. If they can buy or get access to real estate, commercial, residential yield, then that's great. They'll do that. If it's a tokenized money market fund that acts in a particular way, are you going to get retail in there? I'm not sure, but completely agree with you, Richard. It's the quality of the deal, and money will find it. It's smart money, right?
Absolutely. Thank you very much.
I was
So
going to jump on one thing on that because I
Yep.
know Adam and Richard said and the others. One thing I'm working, I mean, I talked about the sports thing, but one big thing that retail could potentially jump on is tokenized music. You know, they can relate to that. There's a big issue in music that, you know, artists only get streaming. Well, actually, they get peanuts from streaming now, so they have to do live tours to actually make money. So in the future, tokenized music, you know, it could be the next Beyonce that tokenizes the music, the fans buy into it, you know, it becomes fan engagement, you know, that whole thing talks off. And what we, you know, Richard, we talked about earlier on about highly frequent, you know, high frequency trading, you know, it's those type of assets that are unique, but people already want that could become, you know, the high frequency traded stuff. So, you know, it could be someone that no one knows at the moment. You know, you go in, buy it for a cent, and these are the things that go up multiple. Why? Because artists do make a lot of money, and I think, you know, music is ripe for blockchain in general outside of RWA. You know, once you get rid of the monopoly that's happening, you have a wallet that distributes, you know, to the producer, to the person that wrote the thing, and it all happens automatically. And management, you know, labels already trying to put their foot down to stop blockchain happening. But it is an industry that's ripe. And I think it's these assets that will come into RWAs as well that's really going to transform the market. I don't think a lot of people can see the vision because they're like, oh, how can you tokenize music? How can you put it on the blockchain? But it's really understanding what the problem is in music. I mean, just for everyone here, I used to produce music back in the day before I went into investment banking. Yeah, believe it or not, you can find some stuff there somewhere. So I've got a lot of background in it, and a lot of the artists and producers that I speak to tell me about their pain points, and I can see for sure. Probably not in the next year, but in the next 5 years, we'll start to see this coming to the fore.
Great point. Very exciting sector as well. So maybe to wrap things up today, and I know some of you have already addressed this in your initial presentations, but if you could leave the audience with one piece of advice, you know, to anyone trying to structure a security token offering and raise capital in a successful manner, I think that would be just a great way to end things. So yeah, we can just go around the table. Maybe Varun first.
Yeah, I think the most important thing is building trust factor. You know, if the trust is there, investments flow. Whether it's in product, whether it's in people, whether it's in structure. I think the most important thing is a trust factor. So, you know, think about before you do anything, think about why would, you know, somebody trust me with their hard-earned money. And the same principle applies. You know, we do the Reg CS, we do the Reg D506Cs, we do the Reg As as well. You know, it's the same principle. You know, if one thing you can take away, that would be building trust and credibility.
Great. Adam?
Yeah, well said, Varun. I think it's back to what I said. Know your why. Why are you bringing the assets on chain? You know, why this audience? What does the token do? Make sure you're structuring the product in a way that can make you stand out, because rest assured, there's many, many different assets coming on chain, and you're going to have to differentiate yourself.
Mike? Oh, you're on mute.
It's almost all set. I think very important to have a real clear plan in mind regarding what you're going to address, how you're going to address, a lot of research. But there is also a bit of luck in there.
Luck. Yeah, well, I guess, yeah, we have to create your luck as well,
Yeah,
for sure.
yeah.
But that's always a factor for sure. Richard?
I would just say, you know, there are 4 legs to the table, and if you are missing one of them, you're dead. That is great deals, targeted investors, data and technology, and regulatory compliance. That has to be your North Star. And I find most firms, maybe 95%, try to nail 1 or 2 of those legs. And if you don't nail all 4, I just don't think it's going to work.
Yeah, fully agreed. And Mark?
Yeah, Gabriel, I think the biggest, oh, I've still got my hand raised. Yeah, I think the biggest thing is really the buy side. So when issuers come, it's really structuring it with the X factor to make sure these deals get filled, either institutions or on our marketplaces as we start to onboard more and more people. Really, I mean, if I leave anything with it, it's really the X factor. What can really distinguish your RWA asset from everything else on the market? And as I mentioned before, that early one that we showed, like the pre-IPO shares, that's quite interesting. As me and Richard mentioned, if you do find right, it's not going to be every asset that goes on to be the next big thing. But hey, if someone invests in 3 or 4 of these RWA assets and they do pick this big one and they get the times 1,000, then they're laughing. So X factor for me, the X factor of RWA. I think we can bring us down on that.
Yeah, absolutely.
Actually, that's a great idea. Klaus,
Yeah,
I think we need to do that. X factor.
Klaus, any opinion and final words, Klaus, on the topic?
Yeah, no, I totally agree. It's been a great discussion, and thank you very much for the speakers for coming here. We from the DigiShares side, we don't do any distribution at all. We are a pure tech provider. We come with a platform for the STO or the tokenization to occur, and we integrate and collaborate with all these great distribution partners. So it's our job as I would say ecosystem participant, right, to build together a distribution channel so that our clients can make successful projects, right? Thank you very much for coming. I don't know if Gabriel, if you have any last comments, otherwise goodbye from here.
That's it. Just thank you to everyone. Thank you. And we'll see you next time.
Bye-bye.
Take care.
Thank
Bye-bye.
you. Bye-bye.
Thank you. See you next time. Bye.